All right, let's get to Bob Pisani, get a look at what's going on in the broader market as well this morning. Bob.
Good morning, David. Happy Monday, everybody. Of course, we're dealing with the fact that the dislocations may last longer than expected. In a sentence, that's really what we're dealing with. You can see Europe is still dealing with it. The stocks is down about 1%. It's well off of the lows. Tough night overseas and over in Asia. Nikkei down 3.5%, 3 days of declines there. Hang Seng down about 2% as well. Here in the U.S., FANG stocks down about 1%, but it's the reopening names. Every day, if you're down, banks are going to be down. Transports are going to be down. Some of the consumer staples will be outperforming. Transports are now in positive territory, but most of the airlines are to the downside. So we're dealing with all of these disconnects that are out there, the disconnects between Wall Street and mainstream. But we're also dealing, as David referenced, the disconnect between retail and institutional investors. So you see the airlines down again today, and of course, Hertz getting that permission to sell $500 million in stock. Barely down at this point, but that's that disconnect, that retail institutional disconnect that we have been talking about. UAL, though, remember, I watched it go from 20 to 50, and now what is it, 32 or so in 2 weeks. 20 to 50 to 32. And the same with a lot of other stocks out there. The energy space has had the same kind of crazy moves. So you look at Halliburton, for example, in energy, $12 a few weeks ago. It went to $16, and now it's back to $12. 12 to 16 to 12 in less than 2 weeks. That's not a fundamental thing. That's a speculative idea. So remember what moves the markets, these buckets that we've been talking about for the last couple months. You can understand what the market does every day if you look into how much it's influencing these various buckets. The valuation, the market's been voting for the last 4 or 5 days that it's overbought, understandably so. Is the reopening going well or not? Well, we've had outbreaks now in Beijing and Tokyo and U.S. There's a little bit of a speed bump here on the reopening story. On stimulus, Powell's been saying rates would have to be low through 2022. I think he's going to put a lot of pressure on Congress this week for more stimulus. So, yes, it's there, but they're going to need more. Treatment vaccine front, still a lot of advances there. I think that's still positive. But the bottom line is you have 3 of the 4 buckets here that are under some pressure. And that's what we're dealing with. We're debating now is not really whether there is a recovery. There is. It's the pace of the recovery. What is that pace starting to look like? So if you're betting on the pace of the recovery, you've seen these 3 phases we've been going through. February to March, we've had the shutdown fears. In April and May, we had the reopening hopes. And now we're doing a bit of a reevaluation. So, I think it's pretty simple at this point. Investors, David, are trying to extrapolate for an economic situation we've never seen before. How many recessions have there been since the Depression? 14, 15, 16? None of them have ever looked like this. We don't have any economic models to really go on. So we're getting a recovery, David, but if we go back to 85% of that recovery, that's still a recession. That's what we're trying to figure out. What is the pace of that recovery looking like? David, back to you.